All right, guys, here we go. It is Tuesday, May the 12th, 2026. We are going to look at the markets. We're going to do it. We're going to look at them. We're going to see what's moving, what we like, what we don't like, how we feel, how we don't feel. So here we go. We'll start it off with the list. We'll just go to the list. Here we go. Hit refresh just in case. All right, guys, here we go. It's your cousin Dustin. Like and subscribe. The Dow Jones is sitting at 49,760.56. It is up 0.11% today. The S&P 500 is at 7,400.96. It is down 0.16% today. The Nasdaq is at 26,088.2. It is down 0.71% today. The Qs are at $707.24. They're down 0.85% today. Gold, whoops, we are not on the right list. There we go. There we go. Gold is at $4,724.10. It is up 0.8. It is up 8%. No, 0.86%. I don't know why. I don't know why I can't read right now. Sorry. Silver is at $87.86. It's up 2.8% today. Bitcoin is at $80,473.98. It is even Steven up 0.02% as we speak. Crude oil is at $83.28. It's down 0.42% today, like that. The VIX is at 17.99. It is down 2.12%. We like to see that as well. Okay, let's go to the heat map. Heat map beat BAP. Let's see what they say about that. Okay, immediately I'm seeing Oracle down 3.62%. Tesla's down 2.6%. What's Tesla at right now? $433.45. Oracle's at $186.79. Whoa, Qualcomm's down 11.46% to $221.67. Dang, electronic technology sector is getting smacked around a little bit. Some of them aren't, though. This here, what's that, Arista Networks? Arista Networks is up 4.48% today. Look at that. SanDisk. Oh, SanDisk is down 6.17%. Oh, shit. Dang. Netflix up 2.59% to $87.66. Lordy, lordy, lordy. How low can it go? How low will Netflix go? Nvidia's up 0.61% to $220.78. You love to see it. Ooh. Broadcom down 2.13% to $419.30. Intel down 6.82% to $120.60. AMD's down 2.29%. Dang, to $448.36. My goodness. My goodness, guys. United Health is up 3.11%. Dang, heat map's a real mixed bag. Arista Networks. ANET. A-N-E-T. Yeah, so here we go. Despite the rest of the sector being down quite a bit, Arista Networks. So here we go. Despite the rest of the sector being down quite a bit, Arista. Despite the rest of the sector having a pretty rough time, Arista Networks is up 4.48% today. It is currently sitting at $136.43 on a 5-day chart. It is down 4.34%. On a 1-month chart, it's down 6.24%. On a 6-month chart, it is up 5.6%. Year to date, it is up 8.78%. On a 1-year chart, it is up 54.4%. On a 5-year chart, it is up 598.73%. On a maximum chart, this goes back to June 6th, 2014. They are up 4,043.6%. That's Arista Networks, ticker symbol ANET. They have a market cap of $179.49 billion. They have a PE ratio of 48.82, a 52-week high of $179.80, a 52-week low of $83.86, with an EPS of $2.92. They have 1.26 billion shares outstanding and 5,000 employees, about 5,000. Arista Networks joins AI Optical Group as valuation sits below targets. Okay. This is Simply Wall Street, I think. Right? Yeah, Simply Wall Street. Arista Networks joins AI Optical Group as valuation sits below targets. Arista Networks, best known for its data center networking platforms and software, is aligning with other technology companies to shape how AI data centers move data at very high speeds. The focus on EBO connectivity ties directly into growing demand for reliable, scalable optical links between AI servers and switching gear, a core piece of modern AI infrastructure. Ooh, that's pretty cool. I was playing with something that has to do with that the other day. For investors, this new MSA adds another angle to the ANET story beyond earnings and product announcements, as standard efforts can influence how ecosystems form over time. The outcome of this work could be important for how AI data centers are designed and which connectivity options large customers consider as deployments evolve. Stay updated on the most important news for Arista Networks by adding it to your watch list or portfolio. Alternatively, explore our community. What the heck? Come on now. Here we go. Key considerations. Joining the EBO standards group connects Arista Networks more closely to the specifications that could shape AI networking purchases. It may be useful to watch how quickly products aligned to these standards appear in Arista Networks portfolio and how large customers reference EBO in deployments. The presence of significant insider selling over the past 3 months is worth tracking alongside any expectations this news may create. For the full picture, you can check out complete Arista Networks analysis. Alternatively, you can visit the community page for Arista Networks to see how other investors believe this latest news will impact the company's narrative. Okay. So, joining the EBO standards group connects Arista Networks more closely to the specifications that could shape AI networking purchases. Let's do this. Let's check out their website. World-class support. Redefining excellence with world-class support. Arista ranks among... Announcing XPO high-density liquid-cooled pluggable optics. So this is just a look at their website here, guys. Let's look at products. Pretty cool. Pretty neat. Alright. Let's ask Gemini about it. Alright. Arista Networks operates on a software-first merchant silicon-based business model. While they sell high-performance hardware, their core value proposition is the software stack that runs on top of it, which differentiates them from legacy competitors like Cisco. Here's a breakdown of the key pillars of their business model. The software-first approach. Software-first approach. The EOS. The heart of Arista's model is its extensible operating system. Extensible operating system, EOS. Single image strategy. Unlike competitors who often have different operating systems for different hardware lines, Arista uses a single software image across its entire product portfolio. This drastically reduces the operational complexity for customers as they only need to certify and manage one software version. Programmability. EOS is built on a standard Linux kernel, making it highly programmable and customizable for cloud titans like Meta and Microsoft who want to automate their data centers. Merchant silicon strategy. Arista does not design its own custom switching chips like Cisco traditionally has. Instead, they use merchant silicon, off-the-shelf high-performance chips from vendors like Broadcom and Intel. Cost and speed. This allows Arista to focus its R&D budget, roughly 20% of revenue, on software innovation rather than expensive chip fabrication. Performance. It enables them to bring the latest, fastest hardware like 400G and 800G switches to market much faster by leveraging the rapid innovation cycles of chip specialists. Customer concentration, the cloud titans. Arista's business model is heavily weighted towards hyperscalers. Primary revenue drivers. A significant portion of their revenue, often over 40%, comes from a handful of massive customers, specifically Microsoft and Meta. Scale. They provide the spine and leaf network architecture that allows these giants to run massive AI clusters and cloud services with minimal latency. Revenue streams. Arista generates revenue through two primary channels: product sales, high speed. Damn it. Arista generates revenue through two primary channels: product sales, high-speed Ethernet switches, routers, and Wi-Fi 7 access points for data centers and enterprise campuses. Service and subscriptions. This includes post-contract customer support, software updates, and advanced management tools like CloudVision, which provides network-wide automation and telemetry. Strategic pivot to AI. As of 2026, Arista has leaned heavily into AI networking. Their business model now emphasizes building AI backbones, lossless high bandwidth Ethernet fabrics designed specifically to connect thousands of GPUs for training large language models. This positions them as a direct alternative to NVIDIA's proprietary InfiniBand technology by offering an open Ethernet-based standard. Now, do y'all understand all that? I don't know. I understand some of it. And there's a little graphic here. But we're going to go back. We're going to go back to their chart. Take a look at something. Okay. So they last reported on May 5th, 2026. They beat EPS by 7.73%. They were predicted to get 81 cents and they got 87 cents. They also beat on revenue. They were predicted to get $2.62 billion and they got $2.71 billion, beating by 3.45%. Very nice. But I like to go down and find when the last time that they missed was, if they have it on here. And if they don't have it on here, it goes back all the way. Q2 2023, they have not missed. They have always beat by a little bit at least. That's pretty cool. We like that. So at a glance, here we go. Arista beats Q1 earnings estimates. Arista Networks reported a solid beat for Q1 2026 with an adjusted EPS of 87 cents against the 81-cent consensus, and revenue of $2.71 billion, which surpassed the $2.62 billion expectation. We'll read one more. AI networking drives record revenue. The company achieved record quarterly revenue representing 35.1% year-over-year growth, largely driven by the accelerating demand for AI-focused networking platforms like the 7800 AI spine. 7800 AI spine. Interesting. Oh, let's do one more. Supply chain constraints pressuring margins. Despite the revenue beat, non-GAAP gross margins slipped to 62.4% as the company navigates a severe 52-week supply chain bottleneck for critical semiconductor components and memory. All right. So, according to Google Finance, the perspectives from across the web, Arista Networks declined recently as investors reacted to a lighter than expected guidance raise despite strong Q1 results. Analysts project continued growth driven by robust AI infrastructure demand, though supply chain bottlenecks and high valuation multiples remain critical headwinds for the upcoming quarter. The bullish view. Strong AI networking momentum. Management raised its 2026 AI fabric revenue target to approximately $3.5 billion, up from the previous $3.25 billion goal. This reflects accelerating demand for open Ethernet solutions over proprietary alternatives as AI clusters scale towards millions of GPUs. Significant earnings and revenue beat. Arista reported Q1 2026 revenue of $2.71 billion, a 35.1% year-over-year increase that surpassed consensus estimates by roughly $90 million. Adjusted EPS of 87 cents also beat expectations of 81 cents, supported by high-speed switching leadership. Positive long-term analyst sentiment. Multiple research firms maintained favorable ratings following the May earnings report, with average price targets near $180. Analysts emphasized the company's 51% return on invested capital and its strong positioning among hyperscalers as key pillars for future upside. 1 second here. Okay. Right on to the bearish view, we've got supply chain and margin pressures. Persistent shortages in high-end semiconductor components have forced the company into approximately $9 billion in non-cancelable supply commitments. These constraints, along with rising component costs, led to Q1 gross margin slipping to 62.4% from 63.4% in the prior quarter. Valuation and conservative guidance concerns. Despite beating Q1 estimates, shares fell sharply as investors viewed the full year 2026 revenue guidance raised to $11.5 billion as overly conservative. At a price to earnings ratio near 47x, the stock faces volatility if growth rates appear to be stabilizing. Intensifying competitive landscape. Investor sensitivity remains high regarding competition from NVIDIA's InfiniBand and other networking alternatives gaining adoption. Sentiment suggests that any evidence of market share erosion to dominant legacy or specialized AI hardware vendors could trigger further pullbacks. All right, so that's ANET, Arista Networks. I think it's pretty interesting. I mean, their numbers don't seem bad. They don't miss. So, what do you think? Let me know in the comments, guys. I appreciate it. Pretty cool. Let's go on and look at some other stuff here. Let's look at... Let's peep the heat map one more time. Refresh my memory on what's going on. Alright. Qualcomm's down 11.46%. That's what happens. That's what happens, guys. Let's go... Let's look at crypto. Suck a big toe. Look at crypto. Let's go. There we go. look at crypto. Alright, here we go. According to Coin Market Cap, the top 3 trending, and we'll do like top 5. Top 5 trending cryptos are Bitcoin at number 1, sitting at $80,694.41. In the last hour, it is up 0.08%. In the last 24 hours, it is down 1%. Ethereum is at $2,284.49. In the last hour, it's up 0.12%. And in the last 24 hours, it's down 2.11%. Saga is at $0.04219, so a little more than 4 cents. In the last hour, it's down 13.22%. In the last 24 hours, it is up 55.41%. Pretty cool. Billions Network is sitting at $0.1897, so damn near 19 cents at 18.98, almost 19 cents. In the last hour, it is down 2.14%, but in the last 24 hours, it's up 35.36%. And then number 5, we've got GiggleCat. Oh, look at that, GiggleCat. Not even a cent. 0.007346 of a dollar. Up in the last hour, it is up 0.03%. In the last 24 hours, it's up 14.22%. GiggleCat. Very interesting. So, when it comes to the markets, we had the CPI come out today at 3.8, exceeding expectations. It was supposed to be 3.7, so that's not too good. Inflation. We don't like to see it. Crude oil, though, is at $83.12. And we got Brent crude at $107.19, $107.19. So, you know, that's kind of a good thing. It seems to be going down. So far, anyways. Let's look at the VIX. So the VIX is at 17.99. Over the past 5 days, it's up 3.87%. The VIX is at 17.99. Today, it is down 2.12%. Over the past 5 days, it's up 3.87%. Over the past month, it's down 5.91%. Over the past 6 months, it's up 2.74%. Year to date, it is up 20.33%. On a 1-year chart, it is down 2.18%. On a 5-year chart, it is down 4.36%. And on a maximum chart, it's up 4.65%. That's not really April 30th, 2004 is how far it goes back. You can see it'd be spiking though. Look at this. What was that? Yeah, that was October 10th, 2008. 69.72, that boy went up. Now this is according to the Copilot AI search thingy. As of December 2026, the Consumer Price Index in the USA showed an annual increase of 2.7%, indicating moderate inflation rate. So they try to keep it at about 2%. I guess that's like the, I don't know. It's just the going rate. That's the rate they made up that they want to keep for some reason. I think it has something to do with, I don't know. I think I know what it came from, but I don't want to say. I don't want to look like an idiot if I get it wrong. I think they just made it up, took it off of like some other country's inflation rate, and was like, this is what we want. The current CPI overview. December 2026 CPI report. The CPI for all urban consumers rose by 0.3% in December, with an annual rate of 2.7%. This reflects a slight decrease in inflation compared to previous months, suggesting that inflationary pressures may be stabilizing. Core CPI. Excluding food and energy prices, the core CPI increased 2.6% annually, which is a critical measure for understanding underlying inflation trends. Projections and economic context. Inflation expectations. Economists project that CPI inflation will remain steady at an annual average rate of 2.3% throughout 2026. This projection indicates a cautious optimism regarding inflation control as the Federal Reserve continues to monitor economic conditions. Upcoming data releases. The January 2026 CPI data is scheduled for release on February 11th, 2026, which will provide further insights into inflation trends at the start of the new year. What? Give me an article from today. What is going on? Or a freaking chart. That's what I want. There we go. Yeah, guys, if you go to CPI inflation calculator, you can see this nice little cool little graphic we got here. Very easy to use, easy to read, you know what I mean? I wish it had the expected one. Like, the expectation versus the actual. That would make it cooler, but whatever. Whatever. And then if you want to know how it's calculated, how are inflation rates calculated? Monthly Consumer Price Index. Data published by the Bureau of Labor Statistics is used to calculate inflation rates. The formula is as follows. So that's something kind of interesting, I guess. We'll highlight the 1930s here. We've got look at the CPI compared to the inflation. Alright, guys, I think that's going to be enough. We're kind of starting to stall here. Check me out, though. Pretty cool. Pretty good stuff.